Alright guys, welcome back to the channel. It's Sunday, I think it's Sunday, right? Losing track of what day it is because of this long weekend here. But it's Sunday, 5:25 p.m., May 24th. Just kind of, sometimes I like to look through YouTube and see a lot of these guys with huge viewership and what they're talking about in their technicals. It's kind of interesting. Like some of the guys are really good with technical analysis, but it's more of like traditional technical analysis where they're really not having a definitive opinion on the market. It's a lot of, well, we could go up or we could go down or we could crash, and here's the bull case and here's the bear case. No one really has an opinion. But some of the stuff is, I don't even understand. I mean, what kind of channel is this really here? I don't really understand what the guy's doing. Sometimes guys just connect lines and draw lines. Until you see these headlines start to end, like, will Apple seal the S&P 500's fate? Question mark. Why don't you say Apple is going to seal the S&P 500's fate? Make a definitive call. You know, S&P 500 moves on next week. Which way? Well, that's really helpful. We're going to go up or we're going to go down, right? Is the bond market predicting another crash? Question mark. Why not just say the bond market is predicting another crash? Is the stock market in a bull trap or a bear trap? Is Apple the leading indicator? No, Apple's not the leading indicator. So it's the same thing. I don't get it. This is when the real estate market will crash. These guys have been wrong since the bottom of this move in the market. So why the Fed can't save the stock market? Well, they kind of already did save the stock market for now. So I trade what's in front of me in real time. S&P shoulders chart, really another S&P. I'm almost interested to look at this really quick. Bear with me, guys. I got to look at this one, so I'll keep the sound off. But it's the same thing. I want to show you my S&P 500 chart. It's just going to be super simple. What we're looking at, super simple. No hard work in this. We don't have to do anything crazy. Okay, this guy's got his dog helping him out with technical analysis. Once again, using a Fibonacci from the very top of the market. Are you kidding me? We're going to base our technical analysis on the very top of a complacent move that had no fear, just numbers, right? We just happened to be that date the market sold off, right? I mean, that's just when the virus news started to kind of hit and things started to get out of control. Unbelievable. And you're basing your entire technical analysis on a Fibonacci retracement from the very tip of that. Not interested. And I don't know what channels this guy's using on his Fibonacci lines or what channels he's using on his trading ranges. A lot of guys are using a simple moving average, which I'm not using. I think the time frame of the trajectory of the market sell-off was so quick that we need to short up our time frames, and using a exponential is a lot better. I don't want to even play the volume on this, but you get the idea. I mean, a lot of guys are very bearish, and until you start to see a lot of these headlines change and this clickbait to be more bullish, the market's not going to be as vulnerable as it needs to be for a significant pullback. There is one trader, though, that I do like, and I found him yesterday, and he's actually really good, and I'll just pull him up here really quick. Let me see if I can do a search for him, because his stuff's really good. I don't know if it will come up. Let me go look into the search here, but his thought process kind of more aligns with my thought process on the market. He does technical analysis based on what he sees, not thinking too far into the future. He does what's in front of him, and he's called Shadow Trader. This guy is like old school. This guy knows his shit. So Shadow Trader, there he is right here. So if you're interested in a guy that's thought process, if you like what I do, this is the guy you need to watch, because he never talks about the economy. He never talks about, the market making head and shoulders crashing. In fact, if you watch his video, he goes through a bunch of stocks. He'll tell you which ones look bullish and which ones look bearish. But he's pretty positive on the market, and he makes some good comments. He had a really interesting comment, too, that aligns with my thought process. Exactly. That's why I like this guy. He talked about when things that should happen don't happen. In other words, when the market pulled back and we didn't get the gap fill, and we didn't get a rollover, and we look at the SPY, and we had all the opportunity in the world to do that, right? We had all the opportunity in the world to do that, and we didn't. What does that tell you? It's very bullish, and we talked about that last week as well. And you can see it on the S&P 500, and then I'll go into the two numbers that you need to watch. It's pretty simple. And we'll kind of stretch this out that way and stretch this out. And what he's saying is that, let me kind of move this over, guys, and I'll come back to it. What he's saying is that when the market had a great opportunity to break down by breaking below what's considered their momentum head and shoulders, but it never really broke my channel head and shoulders, and you backtest and close on there twice, that's actually really bullish, and he agrees with me too. So that move is, to me, is more bullish, and using the exponential moving average rather than the simple moving average, I think is more important, because if you look at the exponential, every time we've hit that level there, maybe I should use a pointer to help you out a little bit better so I don't kind of overshadow it. But every time we've hit that point there, we pull back with some intensity, right? A 3-day significant pullback touching the lower channel line. We hit the exponential 200 again. Another 3-day move. This one breaking the lower channel line, but never closing below it. We always talk about time being important. A lot of traders don't use time in their factors for movement. So that gets to my simple point here. Now we're above it, right? And we're kind of sitting here. That time that we're sitting up here without the immediate price rejection is very bullish. Whether it's a bubble market or not, we trade what's in front of us, okay? So that's how we trade it. So the moving average that I've been using is a 43-day, and that is the days from the bottom of the market sell-off. I want to know how the market's acting in relation to the bottom of the market sell-off. I want to know what the mentality is and what the psychology is versus this area. I don't care about 200 days ago on a simple moving average. I want to know where we are at in this time frame. If we're losing momentum in this time frame, we're going to break below this 42-day moving average. This is going to change on Wednesday to 43, and then on Thursday to 44, and eventually it'll be a 50-day moving average. So that time's important from the bottom of the market, and so far we've held that pretty significantly. In fact, we're bouncing kind of in between these two ranges. So if you're bearish on the market, wait for 2 days below the 43-day moving average, or whatever it coincides with at that time. Like I said, 43 on Wednesday, 44 on Thursday, etc. And then obviously your momentum line is going to be a 200 exponential. It's fairly simple. Your channel line is the top area here, and I kind of feel that we're going to retest that and push all the way up and hit that 300 number. I could possibly see some pullback on Wednesday just based on my wave count, but the wave count could turn into a sideways action. And then we looked at that too on the Kikuchi. I won't beat a dead horse, but on the Hekanashi candles, we are entering into the last part of the wave 5, but it doesn't mean we just crash from there. You know, to say the S&P 500 is going to crash like all these videos say is basically telling you that you're going to bet against the top 10 companies in the S&P 500 without any change in news at all. They're just going to hit some level and crash, right? For no reason. Just because we hit this level, we're going to crash. Because the market's kind of showing some exhaustion. That doesn't happen that way, okay? In fact, it probably sucks in a lot of the bears, and you could have a push through this channel line and blow off to the upside and shakes everybody out, and then everybody jumps in the market, and that's probably when you should short the market. But for right now, everything looks bullish to me. Holding above that trend line for that many days, instead of getting that quick rejection, energy rejection, now you're just kind of hanging out there. That's actually bullish. So we'll find out. We'll find out Tuesday and Wednesday. Those are big days for next week. Every week's big, but you know what I'm talking about. And then here's the ETF that I wanted to look at. And just talk about the mentality of the market too between the difference between now and 1929 is in 1929 people actually bought into companies that they could like touch and feel. It's the factories that they worked at. It's the factories that they walked by or drove by on the way to work. Why is that coming up like that? You know, so when people were selling the market, it was fear because they could actually see the job losses. They didn't have a NASDAQ back then. There was no Fed back then. It wasn't a casino environment like it is now. I mean, people actually bought into companies that made money because they could see those companies, like I said, and they could get a feel for how things were. That's a completely different market now. So if you're expecting the same type of results as 1929, it's not going to happen. It's not going to happen. Whoa, what just happened there? So this is the one I want to look at here. NAIL. It is a 3 times leveraged bull ETF of the home builders. And if I can get back to where we were, let's look at a daily 2-year on this. And the reason I like it is, although it's a leverage ETF, it was moving up prior to the market sell-off. If it's not moving up prior to the market sell-off, I'm really not interested in it. And now we're above 2 channel lines. For the first time, we've actually had a close above 2 channel lines. And I'll skew this right now, and then I'll move the chart here. Should have just bear with me. So I do like this action that we're seeing. The moving averages aren't so important on a leverage ETF, but we've been bouncing back and forth between the lower channel line and then the upper momentum line. So this is the top of the channel line, and this is the top of the momentum line here. I should have changed the colors on those, but you get the idea. So we've been having some energy bounces off the channel lines. We had an opening below it and we got right back into it. Opening below it, got right back into it. And then we fired back up, and just like the S&P, we're kind of chewing time off the clock here, right? Which is bullish again. So this is something that if we come in the market's down on Tuesday, we want to have a game plan, right? We have all these game plans when the market's up, play the momentum stocks, right? The SHOPs, all those good things like that. But do we have a plan if the market's down? So if the market's down, I like the idea of buying into something that's a little bit outside the radar. And NAIL definitely fits into that. Housing, I think, is kind of a vulnerable area, high risk, high reward. But I don't know that housing's really changed that much in this environment here. It's a home builders ETF. I get it. Interest rates could change rather quickly, but the demand for housing continues as populations grow, especially in the southeast. So it looks very bullish. It was up 5% on Friday. It's got momentum. We need a game plan for stuff that's could be down if the market is down and then reverse rather quickly. We're going bullish on the MACD as well with a little bit of wiggle room left in the RSI. There's been times where it's been way overbought in the past and continue to move higher. So I don't expect anything to change. And you can look where it was like that. When we look at those pinned RSIs, because it is leveraged, it started to hit the yellow in here, but look at the move. Even as it hit the high end of the RSI, it didn't matter, man. It flew. It flew from 70 into the, upper 90s, 100. So plenty of wiggle room there. Almost at 100. Plenty of wiggle room there on the bottom end of this. Channeling for sure, but on the upper end, chewing time off the clock, waiting for the next move higher. This could even be a momentum play, but so keep an eye on something like NAIL. And then I got another way to play EVFM. If you missed it, I sent it out to the newsletter subscribers in the email a couple hours ago. It's a very cool way to play that. And then I'll come up with another stock idea. I think that's going to be great for next week if the market hangs in there.